top of the show, we got to the editor's take on what the market construct is looking like with all the kind of global cues that we have in place. Just seeing the US dollar index retreat to the levels it has should be good news for India. And that and more is exactly what we're going to be discussing with Cameron Brandt, who's now joining us. We're going to try and get a sense of the impact of the dollar index on flows, plus the kind of data we've already started to see when it comes to fund flows. A Bank of America report says there's an uptick in the inflow momentum since mid of October, and that you're seeing an uptick in inflows in commodities, discretionary and utilities, and an outflows in financials, energy, as well as staples. Cameron Brandt, good morning from India. Just seeing the way that the US dollar index has retreated, how currencies around the world are now also trading nearly at a 3-month high against the greenback currency. What is this going to mean as far as flows to India also goes, which has been the best performing stock market on the planet now?
It's another small positive, I think, for emerging markets. But there's so many balls in the air at the moment that it's hard to, or I think unwise to pin your hat on a shift in one data point. The latest week, what we've seen certainly in the US context is investors cashing in on the rally we've enjoyed in recent weeks and steering that money into liquidity funds. We are overall, though, seeing a broader appetite for emerging markets funds, certainly equity funds, not debt funds, though China remains the biggest story in play, as a significant number of investors still believe that the COVID restrictions are going to roll back and there's going to be a tremendous bounce that they hope to ride up.
Cameron, in fact, building up on that point, the overweight position among emerging markets are now at multi-year lows if we were to track fund flows. In India, we've of course seen the rise of the domestic investors, but bringing up the China angle that you spoke about, the mixed headlines that we continue to get on what the COVID lockdown is, if there has been easing. From the Indian perspective, we are starting to see higher allocations towards China. Can that reverse?
Oh, I think so. Most of the major themes that we've seen driving the market this year have the capacity to shift fast in either direction. Fed Chair Powell's speech on Wednesday, I think, is a case in point. There was a great deal of attention paid to his remarks about the likelihood of a slower pace of increases starting in December. But if you read the speech, there's a reference to the fact that he thinks that interest rates may need to go higher than the market is penciling in to contain US inflation. The same is true with China. Hopes have been raised that pivot on COVID restrictions will come earlier because of the protests. But on the other hand, President Jinping is heavily invested in the containing COVID program, and he may see things very differently. So markets could yet again be disappointed, and we could see a fairly dramatic backtracking on this particular line of reasoning.
Cameron, morning, would you be able to hazard a guess as to where we could potentially see the 10-year yield as well as the dollar index settle largely on the back of these cues that you've been flagging off? And what do you think is going to be the next big trigger point in terms of the US markets?
Well, I think obviously the December market, the December Fed meeting is always, in some ways, the last big cue for the year and going into the new year. I think that to some degree, an overlooked trigger will be temperatures in Europe. A lot hinges on what kind of winter they have there, how quickly the gas storage is drawn down. And I think that either positive or negative signals in that direction could have a fairly large impact, certainly on Europe and rippling outwards.
That's going to dictate which way perhaps crude demand as well heads and
Yes.
prices too. Cameron, great to have you on the show. Thank you so much for taking the time out and speaking with us today on ET Now.
Very welcome. Cheers.